Good morning. Welcome to the Toomey Stock Market Report. Today is Monday, the 26th, and I am James Toomey. Well, a couple of things developed over Friday and last week, and you can go to my website and you get the free newsletter. It goes over in depth of the market analysis. But for today, what I want to cover is a couple of questions that have surfaced. Many are asking, how do I trade in down markets? Is it too late to go short? So that's what we're going to answer here right today. Also, we want to examine how to handle trading in down markets from a general philosophy. Should we go short or long kind of questions, right? Look at entry point and then what happens if we're wrong. So let's go right to our charts. It's about 10:20 on Monday morning, and the market's opened. As you can tell, short term, this is we're going to go to the short instrument ETF SH, which is short the S&P or the SPY. And as you can tell, we've got a red candle forming today. So right now the market is up a little bit, not by much, but we had that voracious sell-off. So now we say to ourselves, hey, I believe the trend's going to continue down. And if I do, I'd like to short the market. Is it too late? Well, right now, I would advise to hold off in adding to your shorts or taking a new short position. And here's the reason why. If we look at, we're going to expand this a little bit. Look down here in the our fast oscillator, the stochastics. We have the short and fast of that stochastic. And we see the green is now broken below the red, showing that prices are short-term dropping, right? But it's still in a healthy above 75. So once it gets stuck down below 50 and towards 30, would we pay more attention at markets that the price is dropping more? We go up here in our mid, I know our volume bars are covering this, but the green line and the red line, these are the MACD. It's a little bit slower moving average, if you will. And right now, the green is healthy, it's above the red, it's above zero, so it's in good shape, showing that the breadth of the market is still positive, being short. If some people trade off of this. If you look here, when the green crosses above the red, that came around the low part of the SH right there, and then it's been going up ever since, and the green stays above the red. It breaks over zero and stay positive. And you'd still be in the trade. So some people use that if they're really active traders and they're watching the market. So those two things I look at right away, and I say, all right, the market's still, even though it's coming down a little bit, it's still on the short side, it's still healthy on the short side, showing positive diversion, if you want to use that word. All right, so then I go up in here and I look at our daily chart. I look at the trend. I know this is a short-term trend. I call it the Toomey trend track line. We've got, every time it's come down and hit the lows, it's repelled. And then the upper limit line, every time it's hit the upper limit line, it's been repelled and came down. Now, Friday, we went actually above it for a short period, a little bit above it this morning. That's telling us that the market's getting a little bit tired on that direction. Will it go through that? Sure, it can. It doesn't. The market doesn't know about these lines, or can it repel it? If it repels, we expect it to come back into in the middle part of this trend track line. And here's the reason why. I track the daily activity with the 9 exponential moving average and the 14. The 9 is black. If you've seen in this trend, every time it finally crossed above this 9, and every time it comes down there, pretty much acts as repellent, and then reverses. So that's my first indication of where I want to put a position to go, if you will, long short position SH. So that's coming in around 16.28. The low of this daily bar was 16.36. So I'm going to put my buy in about 16.335, something of that nature. That's where I'm going to wait. If it doesn't get there, then I have to rethink that entry. Now, what if I'm wrong? Well, if I'm wrong, I'm going to put my stop right here at what I use, the 14 EMA for. I would put my stop right there, and that 14 EMA is running around 16.09. So if I go in at 16.36 to 16.3, my stop is going to be 16. Make it nice and easy, round number. It might, if you're a Fibonacci person, 16 is the number. But with that said, that's my technical way I would look at the market. Remember, we talked about RSI in my newsletter. RSI is definitely extended. It's up in the high 60s. Once you get a trend that's extended, the RSI becomes less indicative. In the summer, as soon as it went up to the mid to high 60s, whether you're long or short, the market reversed. When it got down in the mid 30s, the market reversed. So the overbought and oversold signals work in a kind of a faster, volatile market. Once the trend established, it does not work as well, but we do still use that and pay attention to it. So that's today's tip. That's where I would go if you're going to go short. The market is still in a downtrend, so we expect the market to be to follow suit. Will it? And we expect the market to. This is the long side, the SPY. We expect the market to once again rebound a little bit and then head back down. And where it goes, I'm not in the prediction business, but a lot of pundits are saying, it's 3,200, and that puts us right about here, which is not that much further down, but it definitely would, and it would continue in this trend track line, right? So my thoughts are that's where we should go today. Stay on the short side. Do not go long. You might get a bump in the market. If the market does bump, we're going to have to wait until we get our buy signal, and it will alert our subscribers when we get those. So you want to go to ToomeyStocks.com. That's the number 2, MEStocks.com. There you get our free newsletter, our free trades, and you can sign up for our trade alerts. I'm James Toomey, and today is Monday. Happy trading. Have a great day.